Hey everyone, it's your girl, hashtag JLoan. And it's my favorite day of the week. That's right, it's Tuesday. And this week I'm actually going to give you a tip. But before I do, please do not forget the food drive is still on and popping. And it goes through December 17th. And we still need your donations. So if you can please bring them by, as stated, if you just order them, I'll come and get them or go pick them up. Let's help the Tarrant Area Food Bank. Get some food for all the families during the holidays. But today's topic is going to be, did you know? And it was very hard for me to really nail down the did you knows because there's so many did you knows in a mortgage. And so these are just some things that I wanted you to know, that if you're going to get a home loan, whether that's refinance, purchase, or new construction, these are things that I feel that you really should know, because it's very important that you are educated and aware, and know that now so that you have time to make your adjustments in case this pertains to you. Okay, so I deemed this topic, did you know? Okay, so the first one is, did you know? So I'm going to step aside, and it's, did you know if you get married during your loan process, you must let us know. This is very important, especially in community property states, and of course, on some loan types in community property states. So most government loans will require that we obtain a copy of the spouse's credit report and put that in the file and count all non-joint debts against our actual borrower. So if you get married in the process, you have to let us know, because if not, that's considered fraud, right? So you don't want that to happen, but you have to let us know. And this could cause you not to qualify, because if your spouse has high debt and you don't qualify, then now you may lose money in the transaction or not qualify at all. So as much as you love them, tell them, can you please wait 30 more days? Okay. So number two, if you open any new debt, even if it's replacing old debt, you must tell us. So this really comes into play like with autos, and this is where I've seen it happen. Well, I got a car and it was less than the one that's on my credit report. Well, that's great. Congratulations on a lower payment, but we still need a copy of that new debt. We still need proof that the old debt has been paid off so we can exclude it, and your loan has to go back to underwriting. And if you're in the pre-approval stage, obviously we need to make sure that all of these changes are made, and that it's reflected on your credit report, which means we'll need your closing documents and possibly a mortgage statement. So that's very important as well, to make sure that you let us know. Okay, so don't drive off in a new car without knowing that it can affect your loan. Okay. Number three, if you change employers, even if there's no job gap and the same pay, even the same position, you must tell us. I had this happen to me where a borrower just changed companies, same position, a little bit more pay, but when we go to verify employment at the end, they stated that they didn't work there anymore. Well, that causes a problem. And guess what? Your loan has to go back to underwriting, because it has to have accurate information as to the day you close and fund. So even if you close on a refinance, there's a 3-day right of rescission, and your loan funds on that 4th day. So if you close on a Monday, you fund on a Friday. If you change jobs anywhere in there and we verify employment, you just affected your funding and causes great havoc. So please do not do that either. Okay, so just the big thing is, did you know, and let us know. Okay. Number four, if you get divorced or have been divorced in the last 7 years, we need a copy of the full divorce decrees. That's right. Every page, every divorce. So if you have 4 divorces in the past 7 years, we need every copy of the divorce decree, every page. I always get, why is that any of your business? Because divorce decrees tell us, 1, you're not married. 2, it lets us know, is there any obligation? Is there any property that you're not telling us about? And it all boils down to, a lot of times clients tell us what they want us to know, what will help them get qualified, and they don't want us to know that. We really don't care who it is or what happened in it. We're just looking at Is there properties? Is there debts? Is there children involved? So again, we need every copy, every page in the past 7 years, okay? Number 5, you cannot always count child support as income. A lot of people don't know that. The number one thing is, one, we need a complete copy of the divorce decree on most loans that unless it's voluntary, but all loans don't accept voluntary payment. So let me make that clear. Most will require a full copy of the divorce decree or full copy of the child support order, or both. And the child support must continue for the next 3 years. So if you have a 17-year-old child, unfortunately, that child support is not going to be able to be used to count as income. So it's very important for you to know. And most times, if it's not stated on that documentation, we will need a copy of the actual birth certificate from the child or children to make sure of what their actual ages are. I did take a couple notes though, because different loans require different things. And I think this is very important, but I'm not going to take a lot of time. So one, continuance for 3 years, that's a must, okay? On conventional, you must prove that you have received it for 6 months before we can actually use that on a loan. So if you just recently got divorced and now you're receiving child support, the guidelines state that you have to have received it for 6 months before we can count it as income. Now, I want to be clear, just because you get child support doesn't mean that we have to use it for your loan. So you don't have to disclose that you get it, only if you want it to help you qualify for a loan. Okay, now if you owe it, we must know. Okay, now if any of the payments are inconsistent or they're not timely payments, that does not count. We can't use that. So unfortunately, if you have someone who does not take it seriously and pay their child support, we can't use that as income, even if you have a child support order, because they're showing that they're not paying it. Okay, conventional does not allow you to use voluntary child support. So if you get it voluntarily, just great mom or great dad, and they're giving you money, you can't use it on that. Now, FHA, again, you need the 3 years of continuance, and you must prove that you received it for 3 months of receipt, okay? And you can prove that either by bank statements, cancel checks, however they pay you, okay? Voluntary is accepted, but the difference is you have to prove 12 months that you have received that, again, via cancel checks, bank statements, things of that sort. So your other half is going to have to provide us some information if you don't have tracking of that, okay? And if it's inconsistent, meaning that you get it, but the payment is like 100, 400, 300, it's all over the place, then we have to use an average of that. Those are the two major ones. So I don't want to make it too long. If you have any questions about any other loan type VA or USDA, of course, just let me know. But again, you cannot always use child support. So on to number 6. In Texas, if you receive any cash back on a loan, it is considered a Texas cash out loan, even if it's $1. So a lot of the times what happens on a refinance is the numbers are going like this. And I hate to say it's going like this. You get your quoted, you get locked, and there's fees that cannot change. But a lot of times, if you're not getting a cash out, we have to zero the loan out. And so a lot of the time, especially in my case, I will make your loan amount higher because you rather not get, so we can do a principal reduction, I'm sorry. So that I try to make it where you don't owe money at closing, because no one wants that on a refinance, because the benefit is you can roll it in, right? So, but if you receive anything, even $1, it changes your loan to a Texas cash out, which means that you possibly may have gotten a higher interest rate, because cash out loans have different effects to your interest rate. So just make sure, if you didn't ask for cash out, don't get cash out, because you don't need to get it if you don't want it. Therefore, you could possibly get a lower interest rate. But again, check with your lender to make sure that this doesn't happen. Okay? Now, number 7, every loan has different guidelines. FHA, conventional, USDA, VA, even Fannie Mae and Freddie Mac have different guidelines. So when I talk to my borrowers and I find out about their story, their situation, it kind of tells me, should I go Fannie Mae? Should I go Freddie Mac? Because I know my guidelines. And whereas some loans may ask for 2 months bank statements, There is one loan that may ask for just 1 month bank statement. So if I see a borrower has, for lack of a better word, a jacked up history in their bank account that's 2 months ago, I may not want to go Fannie Mae because it's going to ask me for 2 months receipt. So it's just very important to know that every loan has different guidelines. And our pet peeve as loan officers is to hear, well, my neighbor didn't have to go through that, and my sister didn't have to go through that. Well, everyone has a story, and their story may not be your story. Your story may be easier. Your story may be more complex. Theirs may be easier or more complex. And so don't compare your loan experience to someone else's. Now, do you deserve communication? Do you deserve to know where your loan is? Do you deserve answers to your questions? Absolutely. But don't compare what someone else got to what you got, because rates change different every day, sometimes multiple times a day. Guidelines change all the time, and you just never know when they close and what was going on in the market unless you're going to study the guidelines. So just enjoy the experience, enjoy the ride, and let us guide you as best as we can, okay? Now, number 8, if you have any large job gap of 6 months or more, some loans require you to wait, and that's correct. If you have a very large job gap, not only will you need a letter of explanation, but some loans will even require that you are on your current job for 6 months or longer, just to prove that you have stable income. So just keep that in mind before you call for a loan, that may be an issue. Now, that's not all loan types, but a lot of the times, you know, if you have a really large job gap, underwriters are not going to feel comfortable with approving a loan if you've only been on the job for 30 days. So just keep that in mind. You want to have some type of history consistency there. And then number 9, just because you pull your credit once, it does not automatically drop your score. This is the number one thing I get all the time. Well, I don't want you to pull because I don't want my credit score to drop. Well, I don't know where you've heard this at, and I'm going to stop that myth right now. If you read anything about credit pulls, yes, a mortgage credit pull is a hard inquiry. So it does count as a hard inquiry. But just because I pull doesn't mean I damage your credit score, okay? You are allowed 5 to 7 hard pulls every 12 months. So if you're not constantly pulling your credit all the time for a car, credit cards, all these different offers, free furniture for 24 months, if you're not doing all of that, then my credit pull isn't going to hurt you. And the biggest thing that you want to know is, can I qualify, and how much do I qualify? Well, I can't tell you that just based on what you verbally tell me, because it all sounds good. But when it boils down to it, an underwriter and I are looking at what's on paper. And so if you're not ready to give us an application and let us pull credit and provide the documentation needed to help you qualify, then you just may not be ready to do a home loan at this current moment, because you got to give something to get something, okay? Even if we can't help you, at least you allow us the opportunity to provide you the advice and the guidance for your future. So again, this is just 9 lovely did you knows. I could make 100 of these. So if you are ever questioning anything about the loan process or qualifying, it's one simple phone call. It doesn't cost you anything, or one simple email. Please feel free to reach out to me on my cell phone, on my social media, on my email, and just say, hey, this is my situation. Hey, take the shades off. I make no judgment. I pass no judgment. I want to help you, and you want to be helped. So at some point, you got to remove the shield and let someone see your story. Let someone help you, and I would love to be that person. So, of course, I want you to have a great rest of your week. Rates are still phenomenal. I'm still helping tons of people refinance, and I'd love to help you or someone you know. So if this video was great to you, please don't just like it, click it, share it, comment, and as always, have a great rest of your week. Be safe, be blessed. I'll talk to you next week. Bye-bye.